All right. Well, hello and welcome. This is Chance Serta, and I have something really exciting to share with you today. And really, what we're gonna look at today is how to create an extra $1 million in your retirement account without having to go get another client or work more hours. Because really, at the end of the day, that's what we all want. We want freedom, and we want stability in our lives when it comes to our finances. But a lot of times we don't want to have to give up the nice things that we enjoy with our family and our time. And so it's how do we, the simple question we all ask ourselves is how do we have more money without giving up the things in our life? And so it's actually pretty simple. If you think about it, there's two ways to do that. You're either going to increase income, right? Go get new clients, work more, invest, whatever it is there. So you're going to get new clients, or you're going to decrease your expenses. You're going to cut out going to Starbucks or this or that. So I think the reason I'm so excited to share this with you today, and just am so passionate about what I do, is there's actually a third option. So you don't have to go get new clients, and you don't have to skip out on your favorite breakfast spot, because what the reality is that a lot of the money that you're looking for in new clients or cutting expenses is actually just right under your nose. And so today, what I'm going to do is I'm going to share with you 3 secrets on what you need to do and the steps you need to take to make sure you have that extra $1 million in your retirement fund. Even if your retirement fund even if retirement for you is only 5, 6, 7 years away, there's still time. And the best part about it, it's not that hard. And I'm going to break it down for you really simple today. And so, the first secret is how to beat the IRS at their own game and use $10,000 of their money to build the life of your dreams. And I know at first that may sound crazy, but here's the thing is that, the IRS, they have, I call their playbook, right? They have a playbook, and it's about 70,000 pages. And so just to put it in perspective, that's about 6 to 7 times as big as the Bible, right? And so it's complicated. There's a lot of rules and regulations, and even Einstein even said that the income tax is one of the most complicated things he's ever ran into, right? So it really is a very complex system. But what's cool about it is that when you really start to understand what's going on, it can actually be one of the most profitable things in your business, is actually to find the money that was going to the IRS, and now we get to keep it in your pocket. And that's really what it comes down to is, how do we use their rules? How do we use their playbook against them? And instead of it taking advantage of us, how do we as wise business owners, as people that are really strategic about how they handle their finances and their business, how do we use their rules against them, right? And the reality is it's not that complicated. At the first, it can be complicated, but when you get in there and really understand some of the basics, it really can be quite simple. And here's the thing is that most people and most business owners, and even a lot of CPAs and tax attorneys and accountants that I talk to, have this conception that the IRS is out to get us, right? The IRS wants to take all our money and do all this stuff. Well, if that were the case, then we would just have our tax brackets and that was it, right? But we don't. We have all of these IRS documents showing us what we can deduct and how we can deduct it. So really, the approach that I help clients see is that the IRS actually wants your business to grow. They want you to be successful because they know that what creates a good economy is small business owners that have stable businesses, right? And so what they have done is set up basically a really complex incentive program for business owners. And so that's one of my favorite things is when you can start understanding that the IRS is really actually there to help your business, not take everything from you. That's when the magic starts to happen. So instead of being afraid of the IRS, we're now excited because they have all of these things that they let us do. As long as we follow the rules and do what they say and do it how they want us to do it, then we get a break for it, right? They incentivize us to do things they want us the way they want us to do things. And so, the thing is that I remember when I first figured this out, I was talking to one of my best friends as a CPA, and we were talking and kind of sharing some strategies and what's going on with clients and doing all of this. And we were just talking, and I was like, man, I told him, I said, do you ever feel like the IRS actually wants to help business owners? And it was kind of a new thought. This was years ago. And I remember thinking that, and I was like, no, there's no way. They're a bunch of greedy punks trying to take all our money. And but it took me a little while, but as I really looked at it, as I really got into tax planning, which is really where we partner with the IRS to find what we can do to get those savings, that's when I was like, okay, they really are here to help us. Now they're a very strict, they're a very strict uncle, so to speak, right? They have things that we can't do, and all these limits and all of this stuff. But at the end of the day, they incentivize business owners, and you not taking advantage of that is you leaving money on the table. And I see it every day. I just finished up with a client. I presented a tax plan today, and he had been overpaying on his taxes by $34,000 a year for the last 6 years. For the last 6 years, he's donated over $30,000 per year to the IRS that he legally was not required to. And the only reason why was because he always saw the IRS as this enemy, right? As this person to fight against. I promise you don't want to fight against the IRS, right? So what did we do? To get that $34,000, it was pretty simple. We had to read some rules. We had to see how he lives his life and his business and those factors. And then we had to see what rules would work for his life, and then we implement them. Pretty simple. And now he's using that $30,000 that had been going to the IRS. Now, you know what he's doing with that? He's wanted to do a fix and flip business in real estate for the last 5 years. He's never had the money to do it. So now what's he doing? Instead of paying $30,000 extra in taxes, he's going to take that $30,000 and put it into rental properties. And so that's what's so cool about this that most people don't realize is that we can use the IRS rules to win for your business. And so the other part is that the tax code can be really confusing, right? It's really confusing. And there's so many different things going on. But here's the second secret is that really, the tax code and tax strategy, all of tax strategies can be summed up in one word. In one single word, they can be summed up. And it really all comes down to this one word of all we're doing is recategorizing. Every tax strategy out there is in one form or another recategorizing an expense, right? So let's put some context around this. The tax code is massive. We've covered that. Einstein said it was complicated. So obviously, if a guy like that was confused by it, there's some complexity to it, right? And so when we look at that word of recategorizing, that's where the power comes from, because we can't just make money vanish. We have to be able to basically use money in a certain way that is now a deduction. Okay, so let's put this in context, right? So one of my favorite strategies is something called a family management company. So it's essentially where you're able to hire your kids or your spouse or your parents or grandkids, basically any members of the family, where you're able to hire them and to get a tax write-off for it. It's one of my key strategies I use for almost every client, and it works. It works really well. And the thing is that what we're doing, so to put this in a scenario, right, of recategorizing. So let's say you're a 36-year-old and you've got a 15-year-old daughter, and your daughter comes to you and says, "Hey, I need money to go to a concert this weekend." How much? "Oh, I need $100, right? So what do? Being the good parents you are, wanting her to experience life and have fun with her friends, you hand her a $100 bill, right? And that's it. Okay. So now you just spent your money to let your daughter have fun. And that's fine. There's that happens every day, right? Option two is now your daughter is no longer just your daughter. She actually works for your business. So she does some bookkeeping for you, and she likes graphic design, so she's taking a marketing class and doing all your Facebook posting for you and all this stuff, right? So now your daughter comes to you and says, hey, I need $100 to go to this concert. Now what happens is you say, okay, so I need you to get, the Facebook post done this week and all this. So now instead of you handing that $100 to her, it flows from your business through a family management company down to her. And now it's a tax write-off for you, right? So now that $100 is now a deduction for you in your business. Same end result. Your daughter still gets the $100. She still gets to go have a good time with her friends. It still came from you. How it flowed changed everything. Okay. And so let's say your tax bracket is, let's just be generous and say it's 24%, right? A lot of times, most of the clients I'm working with are 32%, 24%, 35%, even higher. But let's just say it's 24%. So out of that $100, by you recategorizing, that's all you did, is now a business expense to an employee, right? So that's how we recategorize that. That business expense now just saved you $24 because you gave her $100. You have a tax savings of 24%. So now it saved you $24. So you could actually, you're actually only given, even though you're giving her a $100 bill, it's actually only $76 coming out of your pocket because the IRS has given you 24% because it's a business deduction. And so as complicated as this gets, and this, with late ass corporations and 2553s and W-2s and 1099s and all these forms and Schedule Cs and filing dates and all this stuff, get really complex. But really at the end of the day, all we're doing is recategorizing this. And so, that's the thing is that the IRS is out to they confuse a lot of people, and it's really easy to get caught up with that. But at the end of the day, all we're doing is recategorizing expenses. And the third secret is one that really hits home and is actually part of the reason that I got into this business in the first place. And it's really it's what your CPA isn't telling you and how to make money every year when you file your taxes. And so, because so many times, business owners, we see taxes as this thing that we got to do it, and it's a headache, and we rush last minute to get it done and everything. And so, but what happens a lot of times is business owners think that CPAs are tax experts. And there's some of them that are incredible. Like most of my mentors are CPAs. Most of my mentors have gone to school for that, but have become a tax expert, right? So CPA, remember what it stands for, Certified Public Accountant. So when you're in the process of becoming a CPA, taxation, income tax is such a small portion of it that most new CPAs really aren't sure of a lot of things. They aren't trained in taxes. They're trained in public accounting, right? So they're looking at the whole picture, not just taxes. So think of it like this. There's a difference in a head coach and their roles and responsibilities and duties and someone who just coaches the offensive line, right? So as a tax expert, I am an offensive line coach, right? We're the ones protecting you, the quarterback, where we focus on one thing, blocking, and that's it, right? That's all we do. That's all I do is taxation because that is my focus. That's my specialty. Now, a head coach, right? CPAs are the head coach. They're looking at, okay, the offensive line is a portion, but we also have our receivers. We also have our quarterback. We also have our running back. Oh, but we also have defense too. And then we have special teams, right? So a CPA really are really the head coach. And I look to a lot of the CPAs that I work with for a more holistic view of how some of these things work. But when it comes to taxes, you would be shocked, and I've been shocked at how many times there's a lot of CPAs that just aren't formally trained in taxes. And so, it was kind of interesting. I always kind of thought that, but actually, I was talking to a friend and asking him about when he was in school and how he got started. And he's a CPA out of Atlanta, and I remember him saying he said Chance. He said, when I passed my CPA exam, I had no idea about how taxes worked. I didn't know it. He said, I had to spend another 3 years after becoming a CPA to understand just what you know on taxes. And so, I mean, it's this really miscommunicated thing where clients think that CPAs are tax experts. CPAs think, oh crap, I better figure some of this stuff out. So because the client thinks they should know it, so they feel like they have to know it. But a lot of times they're just unsure of a lot of things. And now there are great CPAs out there that are tax experts. But there's a big difference in someone who specializes in taxation and someone that just focuses on accounting, right? And so most of the time what happens is people, when you go to file your tax return, it's just a cost. Okay, it's it's $500 for this return or $1,500 for this return or whatever. And you just see it as a cost. But where the power comes from, and really where it gets exciting, is when you go to file your taxes, how it can actually make you money, right? Because the process is you find the strategies, you go out and proactively look for the things that we can implement to save money. We implement those things the right way, and then comes tax time. Instead of having that $40,000, $50,000, $60,000 tax bill, maybe it's 25, maybe it's 10, maybe it's 15, right? But cutting that tax bill is so powerful, because now instead of you having to go get a new client or you having to save more money, it's right there. It's been under your nose the entire time, but it's just a matter of tapping into these resources to do that. And so, it's really simple process. There's some loops and some hoops you have to jump through. And that's what we're here to help you with. And so I hope this gave you some value. I hope this gave you some perspective. I'm going to be sharing a lot more strategies and actually some more fundamentals on this. But we have to be thinking about this in the right way. We have to see reality as it really is. And by going through these 3 secrets, that's really what you're able to see.